The massive inflation uptick has impacted food prices everywhere, especially Ron's favorite vegetable, avocados. Now, although avocados are technically a fruit and not a vegetable, I've reclassified them back to vegetable status. What's the matter with these people that treat avocados like bananas and kiwi? Anyway, food is at the top of everyone's minds, and today's ETF battle is a triple header between three food-focused ETFs. We've got an ETF showdown between Invesco, iShares, and VanEck coming up next. Stick around. Welcome to ETF Battles. I'm Ron DeLegge. We're in Season 3, and we're glad that you're with us. The ETF matchups we do on this program are audience-generated, and if you have a certain contest that you'd like to see, send us your ETF ticker symbols in the comment section below or on our Twitter feed, @ETF Guide. Also, we just crossed 17,000 subscribers on our channel. Yay! I'd like to thank everyone that's contributed to our success. That's you, the audience, along with our judges and the rest of the behind-the-scenes team here at ETF Guide TV. Be sure to hit the subscribe button and join us and continue with your multiple likes and comments. We really appreciate all the wonderful feedback. Now, today's ETF battle was requested by a viewer named JM, and after multiple requests for this particular duel, I knew that there was no way that we could skip this particular contest. So JM, thank you for your persistence. You win an ETF Battle shirt. See the comment section below for instructions on how to claim your prize. So we've got DBA from Invesco, MOO from VanEck, and VEGI from iShares. Let's see, that's 2 out of 3 ETFs in today's contest with vanity plate ETF ticker symbols, MOO and VEGI. Now, all of these ETFs are focused on the agriculture sector, which is where food is derived from, so I've been told. Judging today's high-stakes contest is Todd Rosenbluth with ETF Trends and Cinthia Murphy with the ETF think tank, the best in the business. Judges, welcome back to the show. It's great to see you.
Hey, Ron. Hey, Todd. It's great to see both of you.
Great to be with both of you again. Thanks a lot.
So we got our 4 battle categories: cost, exposure, strategy, performance, and mystery. We'll go through each one of them one at a time. I'll keep track of our judges' response. And then at the end of the show, we'll tally up the results and declare an overall battle winner. Keep in mind, our judges can nominate wildcards. They can protest. They can do whatever they want, because you know what? The more mayhem per capita that we can have on the show, all the better. So let's start with the first category, which is cost. And we're going to begin with Cinthia. Get us started.
So cost is not too tough on this category. I give it to VEGI. VEGI costs under 40 basis points, which is, $39 per $10,000 invested. It's relatively cheap compared to everything else here. MOO is 56 basis points. DBA is almost 1%. So VEGI has the lower price tag. What's interesting is that both VEGI and MOO have similar daily volume, which, how much you're paying to trade and your spreads can impact your overall cost, but their spreads are pretty much identical. So they're, even though at face value, the daily volume is much different between MOO and VEGI, the liquidity, the spreads are just as tight on both sides. So I think VEGI is the clear winner here.
That's a strong start. Thank you, Cinthia. Todd, how do you see it when it comes to cost?
I agree. VEGI has the lower expense ratio. The fact that it has similarly tight spreads, despite the fact that it's considerably smaller ETF of that pair, makes it compelling. I think DBA is just a different animal, and it's more expensive. Its use case is different. It's going to lose out in these categories from my perspective. I'll just get ahead of it. It's different than its 2 other products.
Thank you, Todd. Did you say different animal? You should have said different vegetable.
No, it's a different animal.
All right. It's a different animal. So now we shift to exposure strategy, and we're going to get into the details of these animals or vegetables or whatever you want to call them. So Todd, you're still up. Give us your analysis.
Yeah, Ron. I mean, MOO is the ticker on one of them. So clearly, this is not just a vegetable oriented category. So let's just be clear on something, and then we'll dive in a little bit deeper. DBA is a commodity ETF. The two other ones invest in equities of companies that are tied to commodities. Those are quite different. So DBA is going to give you exposure to futures of corn and coffee, although that's different than the other ones, and cattle and wheat, whereas MOO and VEGI invest in equities of various sectors, including consumer staples, including materials. What stands out to me and what's different is that VEGI has no healthcare exposure, so it isn't as diversified as MOO. So my winner is going to be MOO from a diversification of the sectors perspective. When you're choosing something thematic, you might want that theme, but you still want to make sure you're benefiting from enough of the sectors that are tied to that theme, in my opinion. So my winner is going to be MOO from its level of diversification.
Great points. Thank you very much, Todd. We shift next to Cinthia. Exposure strategy, give us your analysis.
Yeah, to Todd's point, I think in this category, which is it's a puzzling battle a little bit, because it's almost like if you think of the gold segment, we're comparing physical gold versus gold miners. So it's one agriculture fund versus agribusiness funds. And that's a very different exposure. So if you're looking to actually own your commodities, futures are the most direct vector to that. So DBA is the fund for you. It does a great job actually at managing contango, which is basically how much you're going to pay to roll from an expiring futures contract to the next. It makes sure to pick contracts in that curve where you're not going to have a huge roll yield, which erodes your return. So it's a great fund if you want commodities futures and actually own contracts on wheat, on corn, on beans, and all that stuff. Now, on the equity side, on the gold miner side, I like Todd. I like MOO better, which is interesting because VEGI is a bigger portfolio in numbers of holdings, but MOO is less concentrated because it also puts a cap on single stock holdings. So no position in this portfolio is more than 8%. So if you look at VEGI, has a bigger basket, but Deere and Company alone is almost 18% of that basket. Where in MOO, that's 8%. So you get less single stock risk, more diversification, even though the basket itself is smaller. So I like MOO the best here for the equity side, and DBA is the commodity side. So it's up to you.
Very good. So I would take that's going to be a split decision between DBA and MOO?
Yeah, it's tough to compare. If I have to pick one, let's go with MOO, but it's a tough comparison. They're completely different.
Okay, good. I got you down for MOO. Thank you for that clarification. We shift next to performance. So Cinthia, how do you see it between these three ETFs?
Yeah, so here the story is different. So I think in the performance, the clear loser, quote unquote, is MOO. It has had the worst performance year to date. It's up about 3% versus, I think, about 12% for VEGI, about 12% for DBA. So you've done better owning physical commodities through the futures contracts, or you've done better owning VEGI, even though it has heavy concentration. In MOO's case, it's also, if you look from a technical perspective, that ETF is trading well below 50-day moving average, well below 200-day moving average. It's really in a technical place, not doing very well, where both VEGI and DBA are testing their 50-day moving average. They've been trying to see if that's a bottom or not. So DBA and VEGI are in very similar places right now. Over a 1-year period, DBA is a little bit better. So I'll give it to DBA in this category for the sake of having a winner, but it's a very close to VEGI.
Thank you, Cinthia. Todd, how do you see it in terms of performance?
Yeah, I'm choosing VEGI. VEGI is outperforming on a longer term basis as well. Cinthia talked about the 1-year record. I think DBA is just different. And so I know it's part of our battle, but I'm moving it out of my comparison head to head or head to head comparison. So VEGI is my winner, stronger long-term record.
That takes us next to the mystery battle category, where our judges can pick that single factor or multiple factors that they feel are crucial to today's triple header. So, Todd, what is your mystery battle category and who wins it?
So I'm glad I got to go first, because I wonder if my colleague has the same category. But I'm choosing ticker name. And what catches your eye with that, or your ear. And, we've been saying MOO and VEGI. MOO just is the winner in that regard. If you ask many of our ETF pundit colleagues, that happens to be their favorite overall ticker. I think people just, their eyes and ears open up when they see that, and they want to do their homework and learn about this ETF, which is why I believe it's helped to retain assets. Even though VEGI has performed better as of late and is cheaper, I think people are just familiar with MOO. They like saying it. I think we should all say it one more time. MOO.
Thank you very much, Todd. Cinthia, you're next. What is your mystery battle category and who wins it?
So if we were to talk tickers, I agree with Todd. I mean, MOO is a phenomenal ticker, and I think these guys were way ahead on the idea of the thematic investing and the catchy ticker, the power of a catchy ticker in this category. So kudos to them. But I think I'm going to talk structure in this mystery category. If this is a category about ags and commodities, because the whole conversation we are right now is this the beginning of the next commodity, super cycle? I think the futures, the direct futures exposure is interesting. Way more than another part of the equity universe. So in that sense, it would be DBA. But I'm actually going to give it to Wildcard because DBA is structured as a commodity pool. It's not structured as an open-ended 40-act fund, which means, you're going to be hit with a K1 at the end of the year. It's not as tax advantageous as open-ended funds. So if you are trying to get into this agriculture story, if you're a believer in this opportunity in commodities, the dawn of this next super cycle, and you want to do it directly through futures contracts, I would say PDBC is an interesting alternative because it gives you commodities futures on a dozen or more commodities. It does it through an open-ended fund, so you're not getting any K1s. And it also works hard to control your roll yields. So it preserves your returns in the face of contango. So I think structure makes a difference here, and I'm going to give it to PDBC.
Okay, thank you very much, Cinthia. That's your wild card choice. That's from Invesco. That's PDBC. We got you down there for your wild card choice. Now we move to the part of the show where our judges get to give us their overall battle winner. So, Cinthia, you're up.
So I like VEGI on one category, MOO on the other, DBA on the other, and PGBC on the fourth. So I am nowhere near a consensus pick here.
My scorecard for Cinthia reads scrambled eggs and sloppy joes.
Yeah. So I am all over the place. Tough decision. So maybe we just go with Todd's suggestion. MOO is the coolest ticker. So I don't know.
But you did nominate a wild card too. So my question to you then, because you really seem to favor, if you're going to play this space of agriculture, focused investments, it seems to me like you like the futures way of doing that. So I guess my question to you would be, how strongly do you feel about your wild card choice? And is it strong enough for this particular ETF to claim victory in today's contest?
Well, I have a sense that the person who requested this battle was really interested in the equity angle. So from that perspective, I would go with MOO. I think it's a more interesting fund. For the commodities story as a story, for agriculture access as the story, I think the commodities themselves are more interesting than the equities associated with food processing plants and health tech, and food technology. To me, those are sub themes to the agriculture, the commodity thing. So I would go PDBC. So if you want equities, I'd go with MOO. If you want the actual commodity futures, I go PDBC.
Thank you very much, Cinthia. Todd, your final chance to weigh in with your overall winner.
Yeah, my overall winner is VEGI. It is considerably cheaper. It has performed considerably better over the long term. Those are two metrics that are important. It's different from an exposure standpoint. It was mentioned that it is relatively concentrated in a stock, but it is because that stock is worked out well for over the longer term for the fund. I think VEGI is the winner. The fact that MOO has a cool ticker, I don't think is a great reason to invest in it, but it hopefully gets people in the door to compare and contrast these two similar in style ETFs from an equity perspective.
Solid takes from our judges, and my battle scorecard reads as a split decision between MOO and VEGI, and those two ETFs are, again, as our judges emphasized, focused on the agribusiness. They own equities of companies tied to the agribusiness. That's a lot different than DBA, which is focused on futures contracts of agriculture products like corn and soybean and coffee, etc. So very different exposures, but Todd liking VEGI for its cheaper cost as well as its better recent performance. And at the same time, mentioning that he did like MOO. He did vote for MOO in terms of exposure strategy, likes the diversification strategy. Cinthia agreed with him on that front. MOO caps its holdings at 8% ceiling, and it's less concentrated, but nevertheless, our judges had some great points and contrasting points, I shall say. And that's good. That's good when we get differing viewpoints because it gives us perspective. It gives us new angles, fresh things to look at and be aware of. And both of you did an outstanding job. We appreciate your timely analysis. Keep up the good work, Todd and Cinthia.
Thanks, Ron. Always fun to come on the show and talk ETFs. So thanks for having me.
Same here. Enjoyed it.
Trust me, this will not be the last food agriculture ETF battle that we do on this program. So be sure to tune in again. And again, outstanding work by Todd and Cinthia for their analysis. Visit the description section below for research links to our judges. And while you're there, also see our viewer resources section. We've got online classes, tools, and a weekly newsletter. So which ETF battle would you like to see in our next episode? Post your ETF ticker symbols in our YouTube comment section below or on our Twitter feed at ETF Guide. If we choose your battle, you win your choice of an ETF Battles coffee mug or a t-shirt. I'm Ron DeLegge. Thanks for watching. We'll see you next time.